Hello children, welcome. The concept which we are going to cover today is drawings and interest on drawings. Interest on drawings is a very important concept for the first chapter, partnership fundamental. Interest on drawings. Interest on drawing is an income for the business. That's why it is added to the interest account of the firm, thereby increasing the total income of the business, as that is an income that is shown on the credit side of profit and loss appropriation account. In common scenario where interest on capital is charged by the owner, interest on drawings is also charged by the business. Means normally whenever in business we have the concept of interest on provision of interest on capital, we also have a provision of interest on drawings. Interest on drawings depends on the nature of drawings. And drawings can be of two types. First is regular drawings and second is irregular drawings. What is regular drawings? Regular drawing is when a fixed amount is withdrawn by a partner at a fixed interval. It is known as regular drawings. Suppose A withdrew rupees 5,000 per month on first day of each month. It's an example of regular drawings. Or we may have B who withdrew rupees 20,000 per quarter on the last day of every quarter. So the periods may be, these intervals may be monthly, quarterly or half yearly. And the information you will be given in terms of per month, per quarter or per half year. But along with that you will be informed, you should be informed about the date of the drawing. That may be in the beginning of the period or at the end of the period or in mid of the period. So accordingly we consider the regular drawings. Second is irregular drawings. When any amount is withdrawn by a partner on any date without a fixed pattern, such drawings is known as irregular drawings. For example, C withdrew rupees 3,000 on 1st January, 5,000 on 31st March and 20,000 on 15th of October. So there is no fixed pattern of amounts or fixed pattern of the dates. So there is no interval fixed as well as no amount fixed, then that we call as irregular drawings. Now let's understand how do we calculate interest on regular drawings. When the drawings are regular, we use average period method to calculate interest. The drawings, as we discussed, it may be withdrawn on monthly basis, quarterly basis or half yearly basis. Along with that, I told you that the period will be given along with the date, that is in the beginning of the period, mid of the period or end of the period. Then we can take average period with the help of this table. Now this table is applicable when the period in consideration is 12 months. Means the year is full 12 months. In the mid, if you see this table, in the mid you are given 6 in each case, whether that is month, quarter or half year. 6 in each case in the mid. Then month के केस में 0.5 is added for the beginning and 0.5 is subtracted for the end. 6 plus 0.5, that is 6.5 in the beginning, and for end it is 6 minus 0.5, that is 5.5. For a quarter, 1.5, that is basically half of the quarter. 1.5 is to be added for beginning and 1.5 is to be subtracted for end. मिड में हमने 6 रखा, क्वार्टर के केस में बिगिनिंग में ऐड हो गया 1.5, दैट कम्स टू 7.5 एंड एंड में हो गया 1.5 माइनस, so it comes to 4.5. For half year, 6 मिड में, ऊपर 3 ऐड, नीचे 3 subtract. So 6 plus 3, 9 and 6 minus 3 for end, that comes to 3. So with the help of this table, we can take average period and we can calculate interest on drawings. Let's understand this with the help of an example. These are the periods which are to be taken for calculation of interest, average periods. Okay. We are given an example. Mr. John, a partner in Modern Tours, withdrew money during the year ended 31st March 2020 from business for his personal use. Calculate interest and drawings in each of the following alternative situations if rate of interest is 9% per annum. So rate of interest is common, 9% per annum. You are given three different cases and drawings amounts. First case is if we withdrew rupees 3000 per month in the beginning of each month. Second, if the amount of rupees 5000 per quarter was withdrawn by him at the end of each quarter. And the third case is if the amount of rupees 20,000 per half year was withdrawn by him in the mid of each half year. So here we have three cases, one in monthly, quarterly and half yearly, and with different periods. So let's have a look at the solution. First case, if we withdrew rupees 3000 per month in the beginning of each month. Now in this case, first we have to calculate drawings. Drawings will be 3000 per month, so into 12 for the year. So 12 times it is withdrawn, so total amount withdrawn is 36,000. So we'll calculate the drawings first, that is 36,000. Then interest is to be calculated at 9% on this 36,000 for a period of 7.5 months. So if we refer to that table, beginning and month, monthly and beginning, it comes to 7.5 months. So 7.5 divided by 12. That amount comes to rupees 2025. Second was if we withdrew rupees 5000 per quarter at the end of each quarter. Now this is the case of quarter. So in a year we have 4 quarters. So first we will calculate drawings. 5000 per quarter withdrawn 4 times during the year. So 5000 into 4, 20,000 is the amount of drawings. Now on 20,000 we have to calculate interest for 9 months and taking the average period as that is end of quarter. So according to that table, 6 minus 1.5, 4.5 months. So 4.5 months we will calculate interest for. So that amount comes to rupees 675. Next case was of a half year. If an amount of rupees 20,000 per half year was withdrawn by him in the mid of each half year. This is the case of mid. So the average period in case of mid is 6 months. There will be 2 half years in the year. So his total drawings will be 20,000 into 2, that is 40,000. On this 40,000 we will calculate interest for 9% and for a period of 6 months. So 9 by 100 and 6 by 12. The amount comes to rupees 1800. So whenever there is case of regular drawings, we have to use average period method. Second is irregular drawings. Interest on irregular drawings, when we calculate, we have to use product method. Now we must understand what is product method. And remember, whenever product method is used, interest is calculated for a month's period, 1 month's period on total of products. Okay, I have taken an example to make you understand this product method. Calculate interest on Raman's drawing at 9% per annum if the amount withdrawn were, we are given different dates and different amount, rupees 12,000 on June 1, rupees 8,000 on August 31, rupees 3,000 on September 30, rupees 7,000 on November 30 and rupees 6,000 on January 31. So these are different dates, and as we have from June to January we have, so that means we are following financial year April to March. So what we do in such case, we write we draft a table, and in that table we draw the amount. First we write the dates and then we write the drawings. In the first column I have written the dates. 1st June, amount is 12,000. Second, 31st August, amount is 8,000. 30th September, amount is 3,000. 30th November, amount is 7,000, and 31st January, amount is 6,000. Now in each of the drawings, for each of the drawings, we have to calculate the period from the date of drawings till end of the year. And as we are following financial year, so we have to calculate till 31st March. So his first drawing is on June 1. So we have to include June to March 31. The period comes to 10 months. Second drawings is on 31st August. When it is on the last date of the month, that month is not to be included. So from September we will calculate. On 31st August he has written, so we will calculate from September, October, November, December, January, February and March. 7 months for the second column. Third drawing is 3,000 on 30th September. From 30th September means from October you have to calculate. October to 31st March, that is 6 months period. Then for the next one, it is 30th November. So we'll calculate December, January, February and March, 4 months. Next is on 31st January. So February and March, 2 months. We'll write the periods in the next column. 10, 7, 6, 4 and 2 I have written. Then we'll calculate products. Now what are these products? Products is drawings multiplied with the period. First column, 12,000 into 10, 1,20,000. Second is 8,000 into 7, 56,000. Third one, 3,000 into 6, 18,000. Fourth one, 7,000 into 4, 28,000. And fifth one, 6,000 into 2, 12,000. Then we have to take this total of products. And as we already discussed, interest is to be calculated on the total of products by the given rate for a period of 1 month. So interest is 2,34,000 into 9% into 1 month, 1 by 12. So the amount is 1,755. I hope with this solution you are able to understand the concept of interest on irregular drawings. Now let's discuss some points to remember. If date of drawings or period is not given, suppose you are given only the example that Mr. A withdrew rupees 50,000 during the year. So in this case no date is given, no period is mentioned. So that in that case we take 6 months as an average period. Whenever in any case you are not given the date of drawing or period, you cannot ascertain any period, then the average period should be taken 6 months. Now this is for a period of consideration of 12 months year. But if the year is say of 9 months, the business they started in July and they are going to wind up or close the accounts on 31st March. So in that case, half of the period in consideration you have to take as average period. So the year is, if the year is of 9 months, we'll take 4.5 months. So this 6 is basically half of 12 months. Next is average period of 1 month should be taken when product method is used, that we have already discussed. Third is if the period of accounting year or your regular drawings is other than 12 months, then the average period should be taken accordingly and we have to calculate interest accordingly. Okay. So I suppose with the help of this presentation, you are able to understand the concept of interest on drawings. Thank you.